don't be embarrassed to start smaller either as far as that goes. When going into real estate, I always tell this for first time investors. If you are a first time investor or you're kind of penetrating through a new market, you want to get your feet wet a little bit.
Welcome to Target Market Insights, a podcast to help real estate investors navigate neighborhoods through the lens of local experts. Each week, we speak with local specialists to talk about their target market, useful tips, and the latest trends and developments. Location is the number one rule of real estate, and this show will help you identify best markets and submarkets for your investing. This is Target Market Insights with your host, John Kasman.
Hey, we're very excited today. We've got a very special guest on Target Market Insights. I'm here with Tryfon Christoforou. Tryf is a commercial broker specializing in multifamily real estate, and he's one of the founders of 3CRE Commercial Realty Advisors. His team has completed over $1 billion in transactions in Ohio, Florida, and Michigan, amongst other states. He's based in Cincinnati, Ohio. Tryf, can you tell the listeners a little bit more about your background?
Yeah, how you doing today, John? Started off currently now as a broker, and then we've expanded with my business partner into a property management company as well. So we kind of play both ends of the spectrum from the acquisition to the management side of things. My background is I was a mortgage banker for 4 years, so I've got the financing experience as well. And then my family is a local developer here in Cincinnati and got me kind of into the business and introduced me to a few people in the business, and I became much more interested in an investor myself, and then kind of transitioned smoothly into the commercial real estate world, where I then met my business partner, Michael Constantini, in order to start the 3CRE brand. And we're also affiliated, one thing I wanted to comment is we're also affiliated with the Sperry Van Ness umbrella, which is SVN, and they're a national brokerage firm. We're a franchisee of theirs here in the Cincinnati submarket.
Awesome. So you mentioned a couple things. One, your family kind of got you into the business. Talk a little bit more about that background.
Sure. My family has probably been doing real estate, I would say, a good 30 years now. Managed, built, and own over 400 multifamily properties. Also have office buildings here in the Montgomery area, which is a submarket of Cincinnati. And they've got retail all over this area, including Montgomery, Lebanon, Ohio, which is a little bit north of Cincinnati, Florence, Kentucky, which is northern Kentucky, the Beachmont corridor, which is the east side of Cincinnati. So they were able to kind of, as a child, I was kind of always, cleaning gutters and things like that with my cousins and kind of just getting to know the management side of things. And, they've had a lot of success. They have quite a few assets here and got me into the business as far as on the brokering side by introducing me to some brokers where I was able to kind of leave the banking world and then get into the commercial side of things.
Awesome. And you're with SVN now. Talk a little bit more about kind of that franchise and how that works with SVN.
Sure. So SVN is just like any other commercial brand that's national. We've got, our main competitors, associates would be someone like Marcus Millichap, CBRE, JLL, and these are all, national type brands that are out there. And the way SVN works is they're based out of California, and there's franchisees all over the country. So we have a huge network that we're able to work with both locally, where there's a few offices, as well as regionally and nationally. And Chuck Cellino, myself, and Mike Constantini are part of the SVN 3CRE Commercial Realty Advisors group. And we're able to utilize the tools that SVN provides us on a national level as well and bring it kind of locally here in the Cincinnati market.
Okay, so you kind of have the national resources of SVN that you can use locally in Cincinnati.
Yeah, and the way that kind of helps us is that, typically with residential type agents or local realtors like your Sipsey Kleins and Comey and Shepherds, things like that, they're only typically marketing to your local investors here in the area. What SVN allows us to do is we take the assets in the Midwest locally here, and we're able to present them to everyone nationally within the SVN network, and then other resources such as the SVN website, LoopNet, et cetera, by using the brand and being able to kind of distribute the listings nationally versus just keeping it local.
Awesome. Well, that's great. Well, that's exactly what this podcast is about. It's Target Market Insights. And since you do have the ability to tap in locally to Cincinnati and then provide opportunities across the country, talk to us a little bit more about Cincinnati as a market and what you're looking for when you go in and look for opportunities.
Sure. Cincinnati, obviously, I'm going to have some bias here. I do like Cincinnati. I grew up here in Cincinnati. It's a very strong market. And the reason we're a strong market, I mean, and a lot of people say that about their market, but Cincinnati, Dayton as a whole, it is very corporate driven here. And we've got Fortune 100 companies, Fortune 500 companies. P&G's headquartered here, which is Procter and Gamble. Kroger is headquartered here, which is the largest grocer in the country now. GE Aviation's here. Fifth Third Bank is here, just to name a few. And we've got a really huge corporate footprint. And whenever you have those corporate footprints, it allows the market to stay stable compared to other markets in the past. And I'm talking from the '08 to 2012 kind of range where you saw a lot of those markets, the Las Vegases, the Miamis, take major hits in real estate. We never really had that here from both an investment standpoint and ownership standpoint when you owned your home, just because we were pretty strong with the corporate footprint and we didn't have a ton of job losses like some of these other cities did. So by having that core corporate kind of footprint here, it basically allows the rest of the city and submarkets to stay stable because there's always job growth or stabilization depending on the industry, which in turn keeps people here, which in turn allows real estate to kind of thrive.
Awesome, awesome. So you mentioned definitely that it's corporate driven, Procter and Gamble, Kroger. How are you seeing that growth from some of those larger corporations, or what's happening in the market from a corporate standpoint?
Sure. So just to name, GE just built, we have a development on the river called the Banks, and GE Aviation just moved some of their corporate offices onto the Banks and built a brand new tower there. So you're starting to see some job growth, and they're bringing people into Cincinnati as well. And a lot of the jobs aren't really going out anymore. They're kind of trying to bring them back to home base. So we're really starting to see that. Great American is another company. They just built the tallest skyscraper in Cincinnati. And that's located downtown, and they're an insurance company that's been growing quite well. So I mean, we're starting to see that the rents and everything are going up. There's a change in the way the city's kind of demographically and income level wise, and everyone's kind of starting to go back into the city. Whereas, maybe 5, 10 years ago, everyone was kind of going out. And now we're starting to see the apartments and values, especially in the downtown market and neighboring neighborhoods around downtown. The values are really starting to go up because of all the revitalization that's going on, because these young professionals are starting to move back into the city.
And you just hit on it. It's the young professionals. Are there other demographics that are moving into the city, or what exactly is driving that youth movement into the city?
Sure, that is specifically jobs and job creation. And I think it's almost the way people kind of want to live. We're kind of mimicking something like a Charlotte. Charlotte has a lot of young professionals in the core. And then as you get older, our school districts are very strong here in the suburbs. So as you get older and you want more land for the children and so they can play outside, et cetera, they start moving back out. But really, the city of Cincinnati's done a great job of providing the restaurants, the retail, the stores, the coffee shops, things like that, back into the city, the addition of the streetcar just to get us around the city, as well as doing the development on the river next to the two stadiums, because we have two major league stadiums here with the Cincinnati Reds and the Cincinnati Bengals. There's just a ton of development and mixed use properties that are going up there that are attracting these younger professionals, your 22 to 32-year-old demographic to kind of move downtown prior to starting a family and then kind of moving back out to the suburbs.
Yeah, it's interesting. I was down in over the Rhine the last time I was in Cincinnati, and the development there was pretty astonishing. And I met a young man who was in the tech industry, and he was telling me a little bit more about kind of the development down there. So, I mean, definitely you see that area growing, and I'm sure it's beyond just over the Rhine, but that was one area in particular that I certainly noticed that revitalization.
Absolutely. And over the Rhine is a prime example of, investors coming together, both on a multifamily front and a retail front. 3CDC's done a great job there in taking those properties and revitalizing them and keeping the history of the properties as well. I mean, they didn't go down and knock all these buildings down. What they did was they kind of refurbished them and kept the historic significance of these properties, but added a modern flair to it, which is really nice. And now you're able to walk down Vine Street, which is an OTR, like you mentioned, John, and you feel safe. And there's just a lot of bars and restaurants and retail going on over there now.
Awesome. That's awesome. So Triff, let's transition a little bit more. I want to talk a little bit more about some of the neighborhoods where you really focus on, where you're seeing opportunities. And as you're taking, properties and opportunities to other investors, where are you seeing that growth and seeing some of those opportunities?
Sure. So the first opportunity everyone always says, like you said, John, is OTR. And to me, really, that opportunity at this point has kind of been, I guess you could say the juice has been squeezed out of it. That was kind of the startup of a neighborhood that has really matured now and is doing quite well. But some of the neighborhoods, depending on what you as an investor are looking for, you know, around downtown, there's a neighborhood called East Walnut Hills, which we've sold a few properties there, and we were able to sell a property that was a complete Section 8 property from '08 till essentially 2012. Then they kind of transitioned it into a young professional type building, and the appreciation in the rents and in the value went up almost 300% in that market.
Wow. Wow.
And that was a 33 unit with a couple retail storefronts. So East Walnut Hills is going through that same revitalization that OTR is now going through. As far as investment properties go, when you're talking about multifamily properties and areas I like to kind of list properties or do transactions in are along the Montgomery Road corridor. And Montgomery Road is a road that kind of goes through the entire Cincinnati, all the way from essentially downtown to really all the way north or east to Mainville. It's called Mainville, and that turns into US Highway 22. And there is a ton of supply of apartments there, and your footprint it's B or C type neighborhoods with B or C type rents and B or C type demographics. And you're really starting now to see the investors, not only locally, but nationally, come into these areas and really kind of clean up these properties, get them refurbished, get them up to speed with the times. And you're starting to see a lot more density as far as those properties go in terms of tenants as well.
Okay. And those areas along the Montgomery Road corridor, what neighborhoods are those?
Sure, great question. There's neighborhoods such as Norwood. Norwood is a neighborhood that is right next to the Hyde Park market. It's literally railroad separates the Norwood market and the Hyde Park market, and that railroad probably separates price wise 200 to 300% in value. So Norwood is actually a nice place for investors because you get a very good return on your money, and the tenants that are typically young professionals, things like that, really feel that they're only a short drive or walk away from the Hyde Park market, which is an A neighborhood here in Cincinnati. So Norwood is along that Montgomery Road corridor. But then as you keep going down, there's another neighborhood called Pleasant Ridge. And Pleasant Ridge is another type neighborhood that is going through a revitalization right now. It was a little bit rougher a few years back, and then investors started kind of going in this area and really bringing that small town feel as they've done with the Walnut Hills, as they've done with the OTR. And now you're starting to see salons, and there was a brewery just there. We sold a property on Montgomery Road that is now housing a new deli, and it's got 5 apartments upstairs. So the owner ended up buying it, redoing the apartments upstairs, and then putting a deli downstairs for the people that are living in Pleasant Ridge to go visit. So that's another neighborhood along Montgomery Road. Then as you keep coming down, you're going to hit into the Silverton and Deer Park markets, which again are C neighborhood workers, median income around 50,000 for those workers. So Montgomery Road has a lot to offer along that corridor, anywhere from Kenwood, which is where the largest mall in Ohio is, all the way up to, like I said, almost downtown Cincinnati. There's a lot of supply of apartments there, and there's a lot of demand of people wanting to live within that area.
Wow, that's great. That's great information there. So, Triff, tell me a little bit more about, just really for a lot of investors who don't know Cincinnati that well or coming from out of town, where would you direct them? Would you direct them along that corridor, or would you have them look at other neighborhoods first?
That's a tough question. I don't like to direct anybody anywhere until I really like to learn their criteria. Some people like Class A neighborhoods, some people like Class D neighborhoods. It's all contingent upon really what their investment criteria is. Now, for someone new coming into the market, I typically like to show them anything that's kind of east of Cincinnati, just because, a lot of the west side properties, and there's a ton of supply there, and I've done deals there. It's a little bit more, I guess you could call it labor intensive or management intensive compared to some of the properties on the east side. And that has to do with your class of buildings, the age of the buildings, and demographics. So, it just depends on the investor themselves. But yeah, I've got an investor right now that we're doing a deal out of Pennsylvania, and he's, purchasing close to $500,000 asset. And I did he flew in, and we, a few times, and we showed him the Cincinnati market. And he really did start to like the Montgomery Road kind of corridor I showed him. And he's currently buying a property that's close to Pleasant Ridge, one of the areas I just talked to you about. And he's purchasing, those returns are around a 9% return for those properties, and that fit his criteria and what he was looking for. So to answer your question, I mean, to direct someone is it's kind of difficult until you kind of know their criteria, John. But that is one of my favorite areas to kind of just show people because there's a lot of supply and growth going on in those areas.
Okay, no, that's a great answer. That's great. And obviously, depending upon anyone's investment criteria and what their goals are, that's going to impact and drive where you're directing them. So that makes sense.
Correct.
Let me ask you this. What's one thing you wish investors knew about Cincinnati before they came and reached out to you to start looking for a deal?
It's funny because everyone comes here wanting a 12 or a 15% return, and we just don't have those anymore. I mean, they were there, and it's funny because I talk to a lot of out of state guys as well, and they're always saying, "Can you find me that next 12 cap property or 15 cap property, which is essentially a 12 or 15% return on your money?" And it's just not there. Compared to the rest of the country, I would say the Cincinnati market is very, very competitive, and your returns are greater than, say, being on the West Coast or East Coast, or even, Miami again, or Florida or Texas. But, the returns are the way the market's been handled here now is investors have come in here both locally and regionally and nationally and really, I think, uplifted all the properties and the values and kind of the quality of buildings you're starting to see now. So a lot of those, rundown type properties are gone. You can't really find them anymore unless you're in a rougher area. But with, even downtown 4 or 5 years ago, we talked about the OTR market again. There's been a lot of development, and it's nice to see because our returns are still better than the rest of the national market. But it's gotten to a level now where it attracts this certain demographic and tenants that you want that allow you to have a stabilized property. And I think that's the biggest thing. It's you're buying stability when you're coming into this market, and that's something that I don't know if people quite understand. And the reason you have the stability, it goes back to the first point I brought up. It's because of the corporate footprint that we have here and the jobs that we have. And I don't think that's going to go away anytime soon just because so many companies are headquartered here.
So this is what's driving that. And I mean, because the corporate footprint is one that's very interesting. To your point, Procter and Gamble is the largest packaged goods company in the country. So you do have a lot of stability there. And you're seeing some growth. I read recently that Amazon was going to, open up a new distribution center in more northern Kentucky. But I know in the Cincinnati metro, that's kind of included.
Correct.
What do you think is including or driving some of that?
We're welcoming everybody with open arms. I think that's number one. I mean, our airport, Delta used to have a hub here, and Delta ended up leaving. They went strictly to Atlanta as far as their hub goes. So our airport was sitting empty for a while. Cincinnati, and our airport is located in northern Kentucky. So to your point, it is almost one market. It's in Covington. But, there's a lot of opportunity here. There's a lot of land around here where you're able to open distribution warehouses, et cetera. But also the city made an effort to not only retain companies as far as allowing them to stay in Cincinnati and giving them the tax breaks and incentives, but also to attract new companies. And I think that's just as important. And, these brick and mortar type office buildings are kind of going away. But what's nice about what we've done downtown is we didn't just put brick and mortar office buildings as far as the new development goes. It's all mixed use. So you've got, 4, 5, 6 floors of office, but then underneath, you've got very strong retail brands. You've got apartment living now. So it's kind of like a community at this point. And that's really kind of how we've spread apart and kind of modernized the way our city is working. And by doing that, it's attracted all the young professionals back into Cincinnati, back to the downtown area. And when you have people moving in and you're creating density, that also helps out as far as housing, retail, storefronts, nightlife, cafes, things like that. It's all a domino effect.
No, that's great. That's absolutely great. So let's ask this: as we look at the city, you've talked a little about the Montgomery Road corridor. You've talked a little about over the Rhine and downtown and what's driving in Covington in northern Kentucky. Where are you based right now? Where exactly do you live, and what do you love about that area?
Sure. So my office is based in Madeira, Ohio, which is right next to the Kenwood area. Love working here. It's a small town. It's a small town feel. Madeira is a Class A type neighborhood, great school district. So when I go outside my office, I'm able to walk to a cafe. We have a grocery store down the street, which is Kroger's. There's lots of little retail type storefronts, things like that. So when I got to get out of the office, I can just take a walk, especially on a nice day like today. Where do I live? I currently live in the Hyde Park market. And that's about 10 minutes south of where I work and 10 minutes north of downtown Cincinnati. Hyde Park is also another Class A type neighborhood, similar to that of downtown. Hyde Park's been a very stable market. A lot of the values there go up by just alone by appreciation versus investment grade things. I love that area. It's a small town feel. There's retail everywhere as well. I can walk up the street and go to a couple of local cafes there. There's restaurants all along the Hyde Park Square and wine bars and things like that. So it's a nice little getaway kind of from the corporate feel, but and big town feel. But I also do love going downtown, and you can typically catch me there, on the weekends.
Awesome. So let's say you live in Madeira, or I'm sorry, you live in Hyde
Hyde
Park,
Park.
you work in Madeira, and you know Cincinnati well. You're kind of been there for a long time. You're a native, but you were originally born in Melbourne, Australia.
Yeah,
I know you love to travel. Talk to me about if you could invest in any other market, where would it be?
I definitely wouldn't invest in Australia. You get no returns there. Everyone from Australia wants to come here. You get about a 2% return over there, which is nuts. But I travel to Chicago frequently, and I know the returns aren't as great there, but there's just a lot of opportunity in Chicago. I'm seeing now too with different development projects going on. One market I was recently in a few weeks ago was the Detroit market, and Detroit still kind of has a bad stigma about what's going on over there, what happened because of all the manufacturing leaving, but I was really starting to see some development there again. And I was staying in the Greektown area, and there's a lot of development going on, mixed use again. There was new apartments being built, a lot of kind of cool urban type restaurant bar type things going on. So I wouldn't mind just kind of checking out the Detroit market either, and just kind of seeing what's going on there, and maybe the suburbs are really starting to come around there. I went into Dearborn, Michigan, which is a suburb of Detroit, and there was a ton of retail over there and apartments and condominiums. So, that is nationally, that's kind of the areas I'd be interested in just because I like getting better returns. As far as internationally, I'm of Greek descent as well. My dream is to eventually own some piece of real estate in Greece where I can go and relax on the beach and retire at some point.
Awesome, awesome. Well, I hope you absolutely get to that point. It's a great place to be. I've
Thanks.
never been to Greece. It's on my list, and I'm
Yeah.
hoping to get there sometime soon,
Yeah.
sometime in the next couple of years here.
Yeah. Definitely something you want to see. Really nice.
Absolutely. So let me ask you this: as you think about Cincinnati, you've talked a lot about yes how it compares to other cities, specifically in the Midwest. What do you think drives Cincinnati as far as it being a place where you can get the strong returns and still being so stable as you compare that to other Midwest cities? Because to your point, as you looked at Detroit, a market that once was riding high, had a rough time, starting to bounce back a little bit. Chicago has, its parts where it's up and down. Cleveland, Indianapolis. As you look at other markets, there may be a little bit more fluidity, but Cincinnati seems to do really well. What do you think is driving that?
Again, it's very simple. It's population, and again, that has to. I keep going back to this jobs topic, but that really does make a huge impact to us. I mean, Dayton, Ohio, is 45 minutes north of Cincinnati, and it's also a very good market as far as the suburbs, as far as apartments go. And we've done quite a few deals out there as well. But when you go into the Dayton Central Business District, a lot of those companies have left,
Hmm.
and the city itself is kind of struggling. There's not a lot of density there. And I think you need to have a healthy city with healthy jobs, with a density of population, which we have here, in order for the market to be stable and attract others to come into this market. And as these corporations, we don't have a huge tourism, revenue stream as far as like a Chicago does, for instance, in the Midwest. But between Monday and Friday, these corporations are bringing people into the city during the work week because they're here coming to the corporate offices working or one of the main offices in the region, which allows us to kind of get other people looking into the city, which again then sparks interest in, hey, I wonder what's going on in Cincinnati, or I wonder how I can invest. I kind of like this market, whereas other cities really just don't have that.
Awesome. I want to bounce back to the earlier part of our conversation when you talked about your family. I mean, you listed out a handful of places where they're investing and they've done really well. Can you help us understand like what did you learn from that experience and working with them and kind of starting at such an early age, walking around those properties and cleaning out gutters? How did that play a role in where you're at today?
Well, the first thing is that real estate is not easy. A lot of people, I always used to say this, I don't know if people still want to think of it. A lot of people wanted to be the next Donald Trump. in terms of real estate. And, it is not an easy business. It's not a get rich kind of quick thing. There's a lot of learning and growing pains that come along with real estate. And I'm sure a lot of investors would agree with that. You know, One thing I learned is that you really have to be on top of your properties. You have to have your criteria set in place. And my family were developers, so they built from the ground up on a lot of things. But, looking now, I invest myself too. And you really just have to know what your criteria is and what makes you happy. Some people are happy with a 5% return. Some people are not. Some people need that 12% return and want to buy those type of properties that require more labor intensive work to get there. But I could just say that I learned that it takes a lot of work. You've got to be smart with your investments. You've got to know when to buy. You've got to know when to sell and how to expand your portfolio. The other thing that I've looked upon and learned from my family is that you have to diversify your portfolio sometimes. And that's what we do here at 3CRE is my partner, Mike, really specializes in the retail assets and I do the multifamily side of things. And a lot of the clients that we're dealing with now, they own multiple assets in different types of arenas, whether it's a retail shopping center, a multifamily, maybe a couple single families, and they kind of diversify their portfolio just like you would with stocks. You don't own or put all your money on one stock typically. You have different types of stocks in different type of fields. One might be a technology stock, one might be a oil stock, whatever. And that's kind of the same thing you have to do with real estate. And I've learned that having that mix, and from my family experience, by having that mix, even when times were bad, let's say on the retail side, in the late 2000s, 8s, 9s, in that area, they had the apartments to kind of lean on and vice versa. So, I mean, that to me is the biggest thing is you want to, build your wealth, but you want to diversify your wealth too.
That's great points. I mean, you talk about diversification. I know that that's an important aspect and why a lot of people get into real estate in the first place. I mean, folks who maybe have a very successful corporate job or doctors, dentists, whatever the case may be, are looking to diversify kind of their income or their portfolio, which attracts them to real estate. And you're saying even within real estate, there's even more diversification, whether that's retail, multifamily, office spaces. There's a lot of other ways to diversify. So that's a really great point for everyone to keep in mind.
Absolutely.
So yeah, you hit on a lot of great things there, Tryf. I want to talk a little bit more about just you and working with you. For those investors who have an interest in investing in Cincinnati, maybe they live on the West Coast, maybe they live on the East Coast. What's the first step? What are you looking for? How does someone get in touch and work with you?
Sure. So we just developed our website. My website is www.3CRE, short for commercial real estate.com. And you can find our information on there. You can email me. You can give me a call. We're pretty much available anytime, whether it's myself or my partner, Michael. Michael, I mentioned he does a lot of retail, but he's got multifamily background as well. He owned and managed about 300 units for 12 years before getting into the retail side. And, we've got a lot of knowledge. And like I said, especially in this Midwest market. And yeah, I'm pretty easy to get a hold of. If you go on my website, like I said, 3CRE.com, you'll be able to find my contact info there.
That's awesome. 3CRE.com. Tryf, is there anything else you'd want guests to know or our listeners to know about the Cincinnati market?
Yeah, I would just say, like I said, I have bias towards here, but it is a great market to invest in. You will get good returns. It's a very stable market, and don't be embarrassed to start smaller either as far as that goes. When going into real estate, I always tell this for first-time investors, if you are a first-time investor or you're kind of penetrating through a new market, you want to get your feet wet a little bit, get to know a broker that you like, get to know a property management company that you like, local attorneys, local accountants, just to get an idea of what's going on in the marketplace kind of before you're penetrating in there. And, with myself, like I said, I'm an investor also. So you'll be able to kind of I'll look at the deals almost as an investor, and I have the banking background. So I will look at it also from an underwriting standpoint. And you'll find that typically I'm on par with the banks or your criteria, depending on once I learn your criteria, just to see where you're at. But, this market is a very strong market. I think there's a lot of growth going on here. And I feel like you will get a better return than you would, like I said, being on the West Coast or East Coast.
Tryf, well, thank you very much for coming on to the podcast. Target Market Insights here today with Tryf, talking about Cincinnati. We thank you again. Hope you have a great day, all right?
Thank you very much, John. Appreciate it. Thanks for the time.
Thank you for listening to this episode of Target Market Insights. Now be sure to subscribe on iTunes, Stitcher, or Google Play, and check out our previous episodes at targetmarketinsights.com. If you like this show, please leave us a 5-star rating and leave us a review as well on iTunes or Stitcher. These reviews and ratings will really help us get the word out to other people. So it's really important, if you're getting some great value from the podcast, just leave a review, leave a rating so we can share that with other listeners as well. We're actually going to be doing something special and giving away a copy of The Best Real Estate Investing Advice Ever Volume 2, written by Joe Fairless, a guest of the show. So we're going to give that away to one of our reviews that we receive. And then we also have a copy of Get Paid for Your Pad by Jasper Rivers. We're going to give away a copy of that book as well. So leave a review. Let's get some great content from some of the people who we've had on the show. And we'll continue to try to serve our community and make sure that we are providing as much target market insights as possible. Until next time, have a great day and we'll talk soon.